a credit shelter trust. That's the topic of this investment in today's general finance lesson. How they work, are they useful, and why some may have a different opinion. I'm Jonah. I'm one of the banking bros here at the Cash Compound, and I'm cracking the code today on this saving and investment vehicle, a credit shelter trust.
You are now tuned to the banking bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.
Before we begin, you should know that a credit shelter trusts are sometimes called bypass trusts or family trusts. Typically, married couples use credit shelter trusts to maximize the benefit of the federal estate tax exemption provides to a couple's combined estate. Credit shelter trusts ensure that each estate pays the lowest estate tax possible. A surviving spouse may receive an income for life and limited access to principal while keeping assets safely outside the estate. Here's how it works. At the death of the first spouse, the will divides the estate into two parts. One, an amount equal to the estate tax exemption, which was $12.92 million in 2023. Now that's placed in a credit shelter trust. The estate tax exemption shelters this amount from the estate tax. The surviving spouse has full rights to the trust income and limited access to the principal. When the surviving spouse dies, the trust property is not included in the estate. Rather, it remains in the trust, or it can be distributed to family beneficiaries. Number two, the remainder of the estate either passes outright to the surviving spouse or is placed in a marital trust for the spouse's benefit. Either way, it is sheltered by the unlimited marital deduction. Here's why this can be very useful. Couples use credit shelter trusts to avoid estate taxation, preserving assets for children, grandchildren, or other beneficiaries, and protect asset from creditor claims. Now here's why some don't like the plan. Irrevocability. A credit shelter trust is irrevocable, which means the grantor cannot make changes, amendments, or terminate the trust after it's established. This lack of flexibility can be a disadvantage if the grantor's wishes or circumstances change over time. And here are my thoughts. My recommendation, again, is to use a trusted professional when exploring this option because proper business valuation is essential and these type of trusts are irrevocable. Now, I wholeheartedly agree and support passing income producing assets to your spouse or to the next generation. We actually teach that here on our channel through the use of the infinite banking concept. If you haven't heard of that before, it's just utilizing the guaranteed growth and cash flows from life insurance without any risk of market forces. Because these private banks are built inside of life insurance policies, that means that one day I will too be passing a substantial benefit to the next generation. The difference will be that life insurance proceeds are not considered ordinary income, and therefore I don't have any concern of capital gains, gift, or estate taxes. Also, throughout my lifetime, I can actually use the guaranteed cash flows from these personal infinite banking policies to fund purchases like other income producing assets. Those assets, of course, have to be passed on after our graduation from this world. And for this reason, a credit shelter trust can be a great option to explore. So you can personally click the link in the description of this video to see how you too can have guaranteed cash flows that you can use to purchase other income producing assets. Are you ready for it in under 60 seconds? Here's your investment. An estate plan that uses a credit shelter trust combines the unlimited marital deduction with the fully utilized estate tax exemptions to 1. Maximize assets distributed to family members, and 2. Minimize estate taxes. Subscribe to this channel and join me for my next investment for a quick breakdown of revocable living trusts.